Market color English, tone for hedgies versus long only, compliant safe. Welcome. Today we're breaking down how to share market color that informs without crossing into advice. Your goal is to capture the state of play so busy pros can calibrate quickly. Remember, there are two audiences: hedge funds seeking tactical edges, and long-only investors focused on durable trends. To stay compliance safe, keep comments factual, sourced, and time-stamped. Most of all, tone matters. A clear, neutral voice builds trust and prevents misinterpretation. By the end, you'll know how to tailor tone, structure updates, and phrase insights that are useful, precise, and safe. Start with data, then add context. For example, S&P up 0.4% as of 10:15 Eastern Time. Move led by tech plus 1.1%. Next, explain what it may reflect: positioning, flows, or news. Always cite sources and timestamps. Per Trace, per Bloomberg, at 9:50 Eastern Time. Avoid directives and guarantees. No buy, sell, or this will. Use hedging language to keep probabilities clear. Words like appears, may, likely, per desk feedback, and per filings. This balance of evidence plus careful wording keeps insight actionable while staying safely informational. Hedge funds need concise, tactical, time-sensitive color. Lead with levels and timing. ES plus 0.5% post-open, buyers and futures. Highlight catalysts, flows, and skew. Earnings prints, options activity, or cross-asset moves that may impact near-term price. Shorthand is welcome. RV, basis, gamma, vega, skew, OI. Offer scenarios, not advice. If skew keeps steepening, upside calls may stay bid. A negative surprise could flip dealers short gamma into weakness. Keep it crisp, time-stamped, and focused on what might move the tape in the next hours to days. Long-only investors look across a longer horizon and are risk-aware. Emphasize fundamentals, trends, and durability. Revenue quality, margins, balance sheets, capex, and guidance. Prefer plain English over jargon. Instead of RV dislocation, say, relative valuations look stretched versus history. Frame ranges and base cases. Base case, revenue growth 4 to 6% over 12 months. Range 3 to 7%. Watch input costs and demand elasticity. Acknowledge risks and offsets. Higher rates may cap multiples. Productivity gains could support margins. The tone is measured, transparent, and focused on what sustains returns. Do use sourced facts. Per Trace, $450 million, HF selling in X between 10 o'clock to 11 o'clock Eastern Time. Do frame scenarios. Base case, range bound, risks, CPI upside surprise, upside, buyback restart. Don't give directives. Buy now, you should rotate, or this will rally. Don't cite rumors without a source or timing. When unsure, qualify. Appears to be pension rebalancing per desk feedback. Keep verbs neutral. Indicates, suggests, consistent with. This phrasing preserves usefulness while avoiding prescriptive language and unsupported claims. Open with what moved and by how much. Crude plus 1.2%. HY spreads plus 6 bits per second as of 14:30 Eastern Time. In the middle, cover drivers, flows, positioning, macro prints, earnings, ETF creations/redemptions, options flow, CFTC data, dealer gamma posture, Note risks and alternative outcomes. If payrolls surprise high, front-end rates may reprice. If soft, duration could catch a bid. Close with what to watch and the next time check. Watch CPI components, earnings guidance language. Next update after FOMC presser or at close. This structure is clear, repeatable, and compliance-friendly. For Hedgies, ES plus 0.6%, 10:05 Eastern Time. Dealers long gamma per spot gamma. Intraday pin near 4, 600 breaks may extend. Watch NVDA earnings. Another Hedgie line. Block put spread in QQQ, skew steepening vs 1 meter. Flows may cap upside into print. For long only, revenue beats are broad across large cap software, operating margins expanding on cost discipline, guidance language improving. Another long only line. Earnings breadth improving. Base case, mid-single digit EPS growth. Watch management commentary on pricing power and backlog. Note the difference. Near-term flow versus multi-quarter fundamentals. Be precise, sourced, and non-prescriptive. Match tone to time horizon and jargon comfort. Hedgies want tactical flow and catalysts. Long only prefer fundamentals and trend durability. Use hedging language and scenario framing to express probability, not certainty. Structure updates with clear moves, drivers, risks, and watch-fors. When in doubt, add a source and time. Consistency and clarity in compliance builds trust, keeps you credible, and turns quick market color into real user value.